Hello and welcome to Finextra. I'm Emily Horler and I'm here with Marion Leslie of Thomson Reuters. And we're talking about how the banking industry is evolving with digital technologies and managed services. Thank you for joining me.
Thank you.
Have you seen a movement away from CapEx to OpEx with regards to technology?
Yes, as firms seek to reduce their costs, they're under huge pressure with regulation and economic circumstances. They're looking at what's really core to their business. And that means they're starting to outsource some of the infrastructure and the technology that they have. And this frees up real estate and staff, but also allows them to focus on what's really important for their business and what really drives returns. So it's an effort to reduce that total cost of ownership, drive scalability and agility, but really it's about no longer managing all that infrastructure to free up resources.
What changes in the market have you seen with regards to partnerships?
Well, all this outsourcing is really causing firms to think really carefully about who they partner with. Clearly, if you're outsourcing the core infrastructure that drives your trading, drives your operations, drives your risk analysis and your regulation, you need to be really clear about who you're going to partner with for the long term over that. So it's causing firms to make some really clear choices about who they want to partner with, and in general this we're seeing fewer, better vendors, both for the content and for the technology that manages, ingests and distributes that content. And managed services providers are clearly a very key decision because that's the infrastructure that manages your lifeblood day in, day out. So fewer strategic partnerships, but also the ability to experiment with those partners. So as you have your core infrastructure being managed by your core strategic partners, does that then allow you to introduce other partnerships to try new things and to innovate?
So what changes do you expect the CDO and CTO to take in light of these developments?
So the Chief Data Officer and the Chief Technology Officer are really charged with delivering on the agenda of reducing that total cost of ownership, increasing scalability, agility, the ability to innovate, but at the same time deliver on all the requirements that the firm has for content and content management, whether that be delivering on regulations, improving risk management, or just the day-to-day supply of data that fuels the business of the bank. So it's a big challenge. So what they do is actually assess what are the data needs and the support needs across the firm, and what are all those constituent stakeholders requiring. And that's the superset of requirements that they engage their strategic partners on. What is the infrastructure that they can provide? What about the support? What about the data and the quality? So that they can engage with fewer, better vendors to deliver the lifeblood that powers their business, but enables them to move forward and grow their organisations in the way that is actually core to their business. So they don't need to worry about what's happening underneath because all that's being taken care of by those strategic partners. And it also then enables them to think about who else they can partner with to deliver some of that innovation. So those strategic partnerships can also enable them to think about introducing disruptive or innovative technologies such as fintechs, providers and blockchain, who can then enable them to experiment in a much more responsive way and at much less risk to the firm with far fewer outlays up front.
Where do you think the wider data management and digital services markets will go in the next 5 years?
So I think one way to look at this is really with cloud and the journey that that's going to take financial firms on. So it starts with that agenda around reducing our total cost of ownership, focusing on what's core and engaging partners to help us run the things which aren't perhaps strategic to us as a business, such as outsourcing the management of our core infrastructures and technologies. So it starts there. It starts with no longer having to manage that kit on your site and hire people and focus resources on that day-to-day running. But then quickly you think about the possibilities that that could introduce. This then enables them to potentially dial up and dial down. As they need new servers, they can quickly spin them up, and as they're no longer required, they can be let go. So it's a far more responsive way of managing your technical estate, far more cost effective, and also allows you to innovate. And then thirdly, as you start to think about managing those ebbs and flows of technical requirements, does that then enable you to think differently about your commercial models, the business way in which you engage with your partners? So as you need more content, you buy it, and when you don't need it anymore, you're not paying. So far more of a sort of pay-as-you-go culture amongst this ecosystem. And then lastly, if you have all that capability, you can get new servers and new applications and have new partners plug in with new data just when you need it, so that the cost of innovation falls away. So you've risked far less and you haven't tied up all your internal resources, so you can innovate and try new things in the market without much cost of failure. So that enables firms to really move their business forward much quicker.
Marion, thank you very much.
Thank you.
And thank you for watching.